We're seeing some juicy candlesticks appearing for XRP, one of our favorites of the channel. The SEC has filed a motion to exclude expert testimony that talks about other uses of XRP. We're talking about ODL and such. And why are the markets green and how long will it last? What's up, girlfriend? I'll tell you what's up. The heat map's looking super green. Bitcoin sitting at 20,745, up 10% in the last 24 hours. ETH 1523, XRP highlight of the show. We're getting close to that 40-cent mark, up 6.3% in the last 24 hours. Bitcoin briefly taps 21,000. That's a good number to be tapping because that means miners can start making some more money. Crypto market cap also gets close to that $1 trillion mark. Yes, 2023 is starting off for a great year for cryptos as Bitcoin is trading above 20,000 for the first time since FTX collapsed. That is important because we all know about the financial pain that FTX did to our favorite cryptos out there, including XRP. And don't worry, we're going to get to those candlesticks, ladies. But why is the crypto market up and how long will it last? Cryptocurrency surged alongside other risk assets like the NASDAQ 100 stock index, which registered profit for 6 straight days. That supports the growing belief that there is correlation between cryptocurrencies and the macro economy. I've been reporting this for months and months and months that macroeconomics rule the roost, and the proof is in the pudding as CPI data and Jerome Powell Fed announcements are having the biggest positive and negative impact on cryptos out there, except for when situations like FTX happen. That is just extreme. Sean Farrell, head of digital asset strategy at Fundstrat, explained that crypto assets performed well following the soft CPI print. In his opinion, crypto's correlation to macros is not going away anytime soon. No, that's right, because right now that's the biggest factor for cash flowing into the crypto economies. It all has to do with how cheap cash is. And remember, the more that Jerome Powell and the Fed raise rates, the more expensive cash becomes. That's right, because business loans, home equity lines of credit, auto loans, credit cards, they all go up with the Fed jacking up rates. And until inflation gets under control and until the Fed feels like they're ahead of things, you're going to have macros rule the roost. So how long will this rally last? Remember, Jerome Powell and the Fed are coming out February 1st with their announcement at 2 p.m. Eastern time. There is a huge divide right now in markets. Been looking at a whole bunch of experts out there. We've got a bunch of them praying for the 25 basis point hit, saying, please stop putting your foot on our throats. Let us breathe for once with a 25 basis point hit. Let some more data come out to see if it's working. But there's others out there. I'm kind of on the other camp of the 50 basis point hit. Not that I'm trying to be pessimistic, but I'm really worried about China's effect on supply and demand. With China opening up the market, that could ratchet up demand quite heavily, which hasn't been priced in yet. Exactly, everyone. But now onto the SEC XRP Ripple Labs case update and then some candlesticks. What is the SEC doing? More of the same. SEC files motion to exclude testimonies of 10 Ripple experts. And we know the strategy from the SEC: delay as much as you can, causing as much financial pain as possible for Ripple Labs and XRP. In fact, John Deaton out there is representing over 75,000 XRP holders that feel that the SEC has damaged the value of their holdings. Well, this is more proof of it right here, as now the SEC is going through more procedural stuff, delaying things even further, and even now trying to get expert testimony wiped off the books. The SEC noted that the expert's opinion should be excluded because they have nothing to do with the 3 prongs of the Howey test. Defendants and their experts ignore Howey and controlling precedent and instead ask the court to decide the question whether defendants offered and sold XRP as part of investment contracts by looking to other legal regimes or facts that courts have repeatedly held irrelevant to the Howey analysis. That part I get. But remember, XRP, it's not just an investment tool, it's also a payment tool as well, and I'm citing ODL usage. So no, Gary Gensler in the SEC, you can't just have a narrow focus of crypto. There are use cases outside of investment, and there's a lot of people using ODL. Hundreds of millions of XRP are used with ODL all the time. I've shown it to you on this channel with whale tracker stats. So what Gary Gensler and the SEC are trying to do, they're trying to cherry pick what fits for them. And I've got the court filing right here because, as always, any article you see in this video will be linked in the description below. This is coming from a man, James K. Filing. XRP community, SEC.gov, and Ripple XRP. The SEC has filed a motion to preclude the testimony of Ripple defendants experts. I want to go to a tweet right here, and this is going to sum it up. Is this all even necessary? This seems like pointless back and forth as usual. And remember, the lawyers always win as these court costs just start adding up, adding up, adding up. And remember, every penny, every dollar that Ripple Labs is spending on court costs is not going into product development. It's not going into expanding the XRP Ripple Labs ODL ecosystems. So yes, I do understand that Ripple Labs has got lots of paper company, but hey, wouldn't you want more of that paper company going to expanding the XRP tree? And now let's get to the candlesticks. As you can see, from the first of the year, we are on a great move on up. XRP did break that 40-cent mark, hitting 40.7 cents, but they could not maintain it with price right now sitting at 39.46. Now, I've got a purple line up here that represents the high of where it reached, and guess what? This has now clawed back since the end of November. Yep, from right around that Thanksgiving time period. Interestingly enough, I wanted to highlight something. This is super, super important, and you got to see this, all right? This is crazy. All right, see this action right here? This is the FTX action right here, and let's draw just a little bit for everyone. Look at this right here. We are right back where the rebound occurred after the initial heavy candlestick drop for FTX. So we are getting closer and closer to clawing our way back to the damage that Sam Bankman-Fried and FTX did to Ripple Labs XRP holders out there. And that's what I was talking about earlier with the stories of, hey, why are things happening, right? It's because of macroeconomic conditions. But remember, the negative effects of like your Celsiuses, your Lunas, right, FTXs, those can have an even more damning effect on the price than macros. But I like that we've regained position all the way to the rebound candlestick after the initial harsh drop of the FTX action. Now, before the FTX action, XRP was rolling right at that 50-cent mark, so we got about 22 to 25% on the upside left to go. Will we have enough time until Jerome Powell and the Fed come out with their next CPI data? The slope of these green candlesticks are very juicy. We need nothing bad to happen with earnings happening with stocks these next few days, because remember, it's earnings season. Yes, it's early earnings season, but it's early earnings season, and we know that now cryptos and stocks are trading kind of along with each other because both are following the macroeconomic conditions across the globe. So macroeconomics are ruling the roost, and they will until inflation CPI data goes in line with what we need for healthy, sustainable global growth. Right now, the latest data had it coming out at 6.5, and we need to get down to a target of 2.0. So you can see there's a lot of room we have left in order to get to that sustainable point, everyone. That's why this next announcement with Jerome Powell and the Fed happening February 1st at 2 p.m. Eastern time is so crucial. I would love to see Jerome Powell and the Fed come out with a 25 basis point hit, because that would continue the rally of the markets. Here's the problem though. If they come out with a 25 and it's not enough to counteract the increase of demand to China, inflation could, instead of going down, could start going back on up. And that would mean then Jerome Powell would have to crank it up even further, and that would crush any rally out there. That's why macros are so important. That's why CPI action is so important. And that's why nearly 3,000 of you out there watched the CPI live stream that we did, where we broke it down in the juicy segments to show you that, yep, once we hit that 6.5, the market would continue to rally. Don't worry, everyone. Big Daddy's got his pulse on the economy. Now, thank you very much for watching. Until more news breaks, I'm going to leave you with this video right here, Crypto Web3 based for you, algorithmically suggested by YouTube. Thank you again for all the support from everyone out there watching. It means so much to me. Until more news breaks, you cool cats, have a great rest of your day.